Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, thanks for making time today. Good to have you back on.
Happy to be here.
Well, stocks on Wall Street last Friday closed lower, and that ended a three-week winning streak. This is despite a rise in U.S. consumer spending. What's the story right now in the global markets as we start a new week?
Okay, well, as you mentioned, the three major indices in New York had a big drop on Friday. Dow went down by 0.86%, S&P by 0.75%, and NASDAQ went down by 0.8% just for Friday. And for the week, all three indices also recorded in the red. For the week, Dow went down by 0.52%, S&P down by 0.97%, and NASDAQ by 1.87%. This came in spite of, as you mentioned, strong retail sales and better than expected second quarter earning report. So at least outwardly, they should have been optimistic, but what turned it around? Well, first of all, fear of inflation. When the last inflation figures for the U.S. Was reported at 5.4%, when Janet Yellen reported that inflation may be higher and more prolonged than what the Fed originally said, and then Chairman Powell sort of reinforced that view. The fear of inflation seems to have risen again in the stock market. Also, the Consumer Sentiment Index was 80.8. It fell from 85.5 last month, and it came in lower than expected. And consumers are fearing inflation as well. The consumers' inflation expectation came out to be 0.84%. Why are consumers thinking that the inflation will be that high? Because they usually follow gasoline prices. If you look at the studies of how ordinary consumers form inflationary expectations, the biggest component is gasoline prices, and energy prices have risen very quickly in the last few months. Europe, it fell slightly earlier than the U.S., but it still fell for most of the week as well. FTSE started falling on the 13th, Tuesday. CAC and DAX started falling from the 14th, but they seem to be basically sharing the fear of U.S. inflation and also the spreading of coronavirus. The Delta variant seems to be affecting the market as well. For today, the European markets all started lower than last week. Asian markets, Nikkei and Shanghai, since last Wednesday, they've been on a downward trend. Hang Seng was on a slight but upward trend all last week, but today they all fell. Nikkei, Shanghai, and Hang Seng all lost somewhere between 0.02% to 1.6%.
And Korea, somewhere in the middle there today, stocks here down too quite a bit. Some big names in the tech sector. It seems to some degree the virus would also be weighing on investors here. Tell us about the domestic market.
Okay, well, for the Kospi, it rode a roller coaster last week, but it was on an upward trend. But today it fell by 1.02%. It ended today at 3,244.04. Individuals bought, but institution and foreigners sold. Kosdaq, it was up on an upward trend last week, except for Friday. It started falling on Friday. It fell today as well, though not as much as Kospi. It fell by 0.21%, and it ended today at 1,049.83. Again, individuals bought, institutions and foreigners sold. The analysts are saying that there's three main reasons why it fell today. The first, like the New York market, the fear of inflation. Second, the ongoing distancing, acceleration of spread of the coronavirus, as well as the Delta variant. And then third, following the New York decline on Friday. So the decline in the New York market on Friday seems to be depressing the entire global market today.
Indeed. And going back to last week, we saw the Korean won gain back some strength against the U.S. dollar, coming down the exchange rate from around 11.50 to the dollar to around 11.40. Then today we're back up quite a bit, around 11.47, 11.48. What's happening with the exchange rate?
Okay, let's start with the theory first. The simple theory says that the changes in long-term changes in exchange rate depend on the difference of inflation rate between the U.S. and Korea. If you take the June U.S. inflation figures, that it was 5.4%. The core inflation was 4.5%. June Korean inflation was only 2.4%, and the core inflation was even less than that, 1.2 to 1.5%, depending on how you measure core inflation. So at least theoretically, in the long term, Korean won should be gaining strength. It should be appreciating against the U.S. dollar, but nothing is that simple. The current and future expected interest rates and the movement of stocks and bonds do affect rates, and the largest effect on won-dollar exchange rate is actually the investment, stock market investment, and capital flow. So in July, we had a rough trend of depreciation, rising 1 per dollar for the won. That's attributed mostly to foreigners withdrawing from the Korean market in recent weeks, and that is in anticipation of U.S. Interest rate increase, as well as the possible tantrum that may come from beginning of taper that's expected sometime late this year. While the simple theory does tell us that Korean won should be appreciating because of the capital outflow, because of the stock market withdrawal by foreigners, it seems to be actually going the opposite way. And for the next couple of weeks, I really don't see any reason for that to change. But once the BOK starts seriously considering raising the interest rate, reportedly that's going to happen in August, we may see some changes in the pattern.
All right, we'll be keeping a close eye on that. And this week we'll get some data on Korea's producer prices for June, which of course would be an indicator of consumer inflation down the road. Producer prices have of course been rising all year. That and what else is on your radar this week, Professor?
Okay, well, for Korean statistics, the big one is going to be the national balance sheet that's going to be announced on Thursday. That'll show Korea's total assets and liabilities for the nation as a whole. For foreign statistics, on Wednesday and Thursday, we'll see some U.S. housing starts and housing sales. That's doubly important because it'll show how strong the U.S. recovery is, but also how much asset price increases are taking place in the housing market, like in Korea as well. And there has been some concerns that U.S. housing prices are going up too rapidly. And then on Thursday, the European Central Bank is having a policy meeting, and they should have some statement on their monetary policy for the near future.
Yeah, housing prices will be an interesting one. Median home prices in the U.S. up almost 25% over the past year, so look forward to that. All right, Professor.
Andy, okay.
Go ahead.
And the housing prices are reportedly higher than it was before the global financial crisis, before the mortgage-backed securities problems that the U.S. had. So it's a lot of people are very nervous about the U.S. housing market, and we'll have to see whether it's reaching even higher levels, which may signal danger for a lot of people.
Yeah, there's a lot of talk out there about 2006. Or, you know, as if that's where we are today. We'll have to wait and see, though. Time will tell. Professor, thanks as always for sharing your insights with us today. We appreciate it.
Thank you.